Retailers and shopping malls in some trouble. You are familiar, I'm sure, with the concept of the ghost mall. I see them all over the place as the big retailers move out and malls are in serious trouble. So we're bringing in a specialist in commercial real estate. His name is Bob Knakal, Cushman Wakefield Investment Sales Chair. Top position at a top company about commercial real estate. Bob Knakal, welcome to the program.
Thank you, Stuart. Good to be here.
What are you going to do with all this real estate, these ghost malls? And I see them everywhere.
Well, Stuart, real estate constantly gets repurposed in different cycles. Different types of properties do better than others. Retail has seen significant changes based on technology.
So what are you going to do with all these? I mean, you've got so much space in all of these malls all over the place.
Creative developers will figure out a way to repurpose that space and figure out a viable use for it.
But the value has to go down because there's so much supply of this real estate, surely.
Well, supply and demand always impact things. Clearly, we have a little bit of excess supply, both in the retail sector and the residential sector today.
You, sir, are being very defensive. Because you know that I'm onto something. You know perfectly well that if Macy's and Sears move out of a shopping mall, that shopping mall is toast, and the value of that real estate goes down. Are you going to tell me I'm wrong?
No, absolutely. You're absolutely right. But that always creates an opportunity for people who can look at a different use for that real estate, look at what the underlying land value is. Potentially, there could be zoning changes that would allow for construction of office buildings or apartment houses on that site. So there's always something to do with land there. Not making any more of it, I was once told.
You've got a bright and smiling face because you're in that line of business. I see where you're coming from. Didn't the Federal Reserve say, watch out, this bubble in commercial real estate is about to burst?
Absolutely. They warned about that. And I'll say that, you know, as in New York City, Manhattan, what happens in Manhattan happens before it happens outside in the outer boroughs, just as what happens in New York happens before it happens in the rest of the United States. We have seen some softness in the marketplace. I think that definitely we've seen a reduction in the number of properties being sold. Values have some downward pressure being exerted on them.
Now we're getting to it. Now we're getting to it.
No, but that's a fact, and that's because underlying fundamentals have been degrading a little bit. We have reductions in residential rental values, retail rents, office rents are about to turn. But I think one thing the administration can do, there's been a lot of talk about tax reform. Market participants in the commercial real estate market are more highly sensitive to changes in tax policy than anything else. In fact, if you look at the past 34 years...
You want a tax cut?
I would love a tax cut.
You want a corporate tax rate cut?
That would be helpful, but there are a number of things that impact real estate, namely the capital gains rate, depreciation schedules, the interest deductibility, 1031 exchanges, which is a way to defer capital gains taxes. These are all things that impact the market very, very profoundly. And what we've found over the past 34 years, 3 of the top 4 years in which we've had spikes in the number of properties sold have been years in which there have been tax policy changes, 1986, 98, and
I'm reading between the lines here.
2012.
I'm reading between the lines. Commercial real estate is down, but you think that the cavalry tax cuts on the way to bail you out.
It could help very, very significantly, Stuart.
I knew it. I knew it. I knew it. I'm personally thinking of investing in single-family homes as opposed to the stock market. I know that's not your area, but am I onto something?
Not necessarily a bad hedge. I think real estate over the long term proves to be very good.
Not necessarily a bad hedge. What's that mean? You're an idiot? Is that what you're telling me?
No. A lot of people who invest in single-family properties, if you're not trying to time market cycles, the yield or the return that you would get if you were to rent that house out usually is very low, 2 or 3%. So you probably could do better on a risk-adjusted basis buying bonds. But
actually, I'm thinking of buying junk, fixing it up, and selling it.
A lot of people make a lot of money doing that.
Yeah, I'm not a house flipper, although I suppose people will call it that.
Sounds like another show coming up.
Yes, could be. Could be. Bob Knakal, you're all right. Thanks very much for joining us, sir.
Great to be here, Stuart.
Sir.